Welcome to the alternative data future of panel, or rather fireside chat now between myself and another uh, brilliant data guy, Conor Moran from Inpher. Welcome, Conor.
How are you? Thanks for having me here today.
Awesome. So I'm Alexander Fleiss. I am the CEO of Rebellion Research. We are a think tank, robo-advisory hedge fund. We put out research and we develop machine learning. I also am an avid teacher and research instructor at a number of schools. And today we're going to be conquering the future of alternative data, something I'm passionate about. And, I think we should get a little background on Inpher. Conor, can you give us a little 411 on your firm?
Yeah, absolutely. Lots to talk about. My name is Conor Moran. I work in business development here at Inpher. My professional background has been mostly working at startups that have unique orthogonal data sources and then helping bring those sources to market in the alternative asset management space, primarily initially for systematic hedge funds and then kind of scaling that out for fundamental managers. And now I'm working for Inpher, and I'm helping develop business in a brand new space that we at Inpher call secret computing, which is also known as privacy preserving machine learning.
So secret computing is actually really just kind of ethical, is a way of accessing data in an ethical light.
That's one way of looking at it. Compliance with international regulations, like in the form of GDPR with data transfer, or national frameworks that we're starting to see evolve. You saw California here in the United States, and the United States possibly moving to a national framework similar to GDPR. But if I could give you the elevator picture, if I had to give you the short explanation of what privacy preserving machine learning is, imagine being able to operate on data without ever seeing the underlying data inputs and without requiring any kind of data transfer or without the involvement of a third party. So that's kind of the short explanation of it. And we as a company believe that more data makes better machine learning models. And it's not just our mantra. I think it's a mantra for anybody who works in machine learning and data science, right? Getting access to more data. That's what we do. So there's the ethical component where you have data that has potentially very private inputs. Like imagine hospital patient record data, right? Most people don't want to have that out there in a raw format, as well as being able to access that new data and make better machine learning models without seeing the underlying private inputs. So that's kind of the short explanation. There's a much deeper explanation getting into some of the different cryptographic techniques that make that possible. And we call it secret computing. You're starting to hear terminology like privacy preserving technologies, privacy enhanced technologies being used as nomenclature as the space matures a bit.
Now, do you get the company's permission, or how do you access all this data?
Yeah, sure. So the way it typically works is you would have somebody license our technology. We have the XOR secret computing platform. Imagine it's a bank, or maybe bringing it more into what we're talking about here today. Imagine a hedge fund, a systematic hedge fund licenses our XOR technology. XOR is XOR, that's what we call it. They've identified a number of different data sources that they want to be able to operate on. And this could be basic statistical analysis, right? Like summation. It could be more complex machine learning techniques like XGBoost. And they've been able to go out to these different data sources that they've identified that they think may be adding value. And there's kind of a binary exchange, right? So in some cases, they might be paying for the data. In some cases, they might be giving attribution to the data owner, like imagine the United Nations working on data around refugees or something like that. There's a lot of different reasons why people would want to collaborate and make the data available. What they would do is they'd be able to deploy what are called XOR machines to those data sources.
How do you spell XOR? How do you spell that, XOR?
Just XOR.
XOR. Okay, gotcha.
Yeah, but the key here with these virtual machines and XOR machines, and that's where the data goes, right, is that they are behind the firewall of the data source, meaning it's never exposed outside. It could be in the cloud, could be on-prem, could be in a hybrid approach, right? And so if you're a CISO or a data architect, that's how you're thinking about it. If you're a business owner, if you're a data owner,
So you guys don't host the data, or your clients don't host the data? I mean, who's hosting the data?
Inpher never sees the data, and the person who licenses our technology never sees the data. The data owner, the data stays in situ with the data owner, right? Keeping it like maybe making it a little less abstract. Imagine, I'm a drug developer here in New Jersey, and I've licensed the XOR technology, right? I've identified data sources in Belgium, Luxembourg, and Germany at hospital networks, right? You're talking very sensitive data inputs, right? Data that might ordinarily have to be anonymized or pseudonymity, or maybe the features are just left off entirely, or the data is not exposed. Well, now you can compliantly operate on this data. The data source owner, let's just say all these data sources are in the cloud, Amazon, GCP, Microsoft. They put their data on a virtual machine. Could be in the cloud, could be on-prem. That's where the data would go. And so if you're a business owner and you're thinking about this data, I like to make it a bit more simplistic and just saying, you're putting a CSV file or an Excel sheet on something that looks like a folder, almost like a Dropbox folder. That's how you should think about where the data goes.
But how actually heavy though is this data? I mean, could an analyst work from his laptop with the data?
Yeah, absolutely. Absolutely. Our XOR technology solution is accessible in a number of different ways. We have our API. We have our user interface. So even if you have, if you're a business unit owner, but maybe you have limited exposure to data engineering or data science or cryptography.
What about geospatial? Are you able to access any geospatial data yet, or is that not?
Yeah, we're agnostic. Yeah, it's a great question. We're agnostic is the type of data that's being used, right? We deliberately focus on the technology as opposed to creating, say, for example, a data exchange where there's lots of private data inputs or data sources, with private inputs. And so when you have data being made available from geospatial or location data, obviously very sensitive data, you can use that with our technology as long as it's structured data. And I'll give you an example. I used to work before I came to Inpher. Part of the reason I found out about Inpher and why I thought it was really cool and why I joined Inpher is I worked for a company that specialized in location data. And this is very precise, very accurate data. So we kind of knew where tens of millions of people were going around the world. And privacy came first for us at that company. And so there were a number of features that were left off. In doing so, though, it diluted a lot of the value in the data sets. At least that was my opinion, the opinion of some of the hedge fund clients. And I thought to myself, well, there has to be a better way than this. We didn't want to anonymize the data. We didn't want to leave the features off necessarily. Using technology like ours would allow somebody to perform the type of analysis that they want on a data set like ours, or in conjunction with other similar data sets. Imagine weather data, satellite data, things like that, to gain the type of insights. Will you go out
and get the data? If you don't have it, will you go out and get the data? Like, let's say I want to short, Michael's, arts and crafts. Can you go out and get purchasing data for Michael's?
We ourselves, Inpher, would not serve as an intermediary in that relationship. The person licensing our technology would have to have some understanding or familiarity with the data source that may be of value to them. That being said, it's still a fairly early space. It's a fairly new technology. And so there's a lot of education that goes into this. And so to the extent that Inpher will help educate that data source owner about the cryptographic security of our technology and how it works and where it works, we're certainly involved in those conversations.
Well, why don't you talk about the cryptographic security for a minute or two, if you could opine on that?
Yeah, sure. So secret computing broadly, in many ways, is very similar to data science, right? Data science involves a number of different techniques. Secret computing has technologies that are under this umbrella: secure multi-party computation, homomorphic or fully homomorphic encryption, federated learning, differential privacy. They're all kind of used in different ways, and they all have their advantages or disadvantages, right? There's trade-offs with each one of those. We tend to focus on multi-party computation specifically because we can maintain privacy and we can also maintain precision in the output. Right. So, federated learning might be one that you and some of the folks that have dialed in here today are probably the most familiar with. That's a situation where you have locally trained models. Imagine every time you're using your mobile phone, you're typing something in, you're typing somebody a text message. It's trying to predict what it is that you're going to type to help accelerate the time it takes for you to type a text message, right? That's one example of a type of cryptographic technique. Multi-party computation does exactly like what I just described. Someone is the analyst licensing our technology. They deploy virtual machines to a data source or multiple data sources. Could be even an internal data source, right? Like imagine a bank or a large conglomerate, and operating on the data in a way that is mathematically provable to be completely secure.
That's very interesting. So what do you see in terms of where you guys could be in 2 to 3 years? What data is not accessible now that could be accessible in 2 to 3 years with greater technology? And also as well, do you see drone swarms offering new and more alternative data? So that's a gigantic question. I apologize.
That's good questions there, right? I think it's something we all kind of think about. I guess I'll tackle the first one around what types of data might be accessible. So like I said, this is a fairly new space. The technology itself isn't new. I mean, this was really number theory since the 1970s, but really within the course of the past 3 or 4 years has really been able to be put into practice as something that is commercially reliable and feasible and something that people can use at scale. I think where you're going to see the most value is where you have data source owners who are just completely not making the data available that they think may be valuable now, right? Data monetization, because of the risk of the sensitive inputs, right?
And quick question: can cloud infrastructure players sell the data on their platform, or can they not access that, or is that not legal?
Yeah, I mean that's actually, we've had cursory conversations with some of those major data exchanges with the cloud providers, and there's a lot of interest, right? Because the more data they have on their exchange, the more money they make, right? And so the data would it's the same concept. The data would be on XOR machines where the data source is located, but the exchange would just serve as a conduit for people to access more data, if that makes sense.
Yeah. So Inpher is really more an exchange, you'd say?
Yeah, I mean, we're totally agnostic as the type of data. We're a SaaS-based technology that somebody licensed when they've identified data sources that may be valuable to them. Those could be internally, they could be external data sources that are out there. They could be data that they're buying now where they're not comfortable with the type of data that's being shared, or they don't want to access that data that has private inputs. We serve as the technology layer to make that possible, that type of analysis, machine learning analysis on data, accessing more data to build better, more precise models.
What do you think is most popular data right now for hedge funds? Do you see one that kind of dominates one area, one industry, or do you think it really just depends on what that fund is looking at? Or do you see like, biotech has the greatest penetration of alternative data of anything I've worked with? Obviously, I just made that up.
Yeah, I mean, I just, kind of my layman's opinion. I think systematic hedge funds have kind of figured out where more value might be available in the data sets that they already buy. It could be location data, it could be geospatial data, it could be healthcare data. I think they've kind of figured out where some of the bottlenecks are, but they might not necessarily be adopting a technology like ours at scale just yet.
Okay. Now, what about the fundamental funds? Can you speak to fundamental funds and where they're at? My brother, for instance, is a value investor, runs a large hedge fund called Soleil Partners. Very proud of him, and he's just a deep dive individual. I don't think he knows how to program. How can you guys work with a fund like his?
Well, we make it super easy to work with our technology.
Okay.
but part of the I think part of the challenge of understanding technologies like ours is it sounds like magic, right? The first couple times I heard it, I said, "What?" And so we put a great deal of work of taking that abstraction out of it. We realized, kind of our learning curve as a business is that yes, the end users tend to be machine learning data scientists, right? I mean, that's really where the most value is extracted from a technology like ours. But to get to those machine learning data scientists, you're oftentimes having conversations with business owners. Those business owners typically don't have a lot of familiarity with data science, data engineering, cryptography, right? So what we've tried to do is make the platform as accessible as possible. So we have a user interface that allows just about anybody to interact with it. We even have a trial interface that anybody who's listening could go to our website and sign up for without having to download or install anything and kind of play around with real world use cases, right? So
anyone watching today can go to inpher.com and start playing with your data and checking it out.
Yeah, infer.io. Actually, if you go there, you go to the website. I don't know how many people are listening again. Hopefully, I didn't just crash our website. But yeah, you can sign up for it. You don't even really need a password. You don't have to download or install anything, and you can kind of play around with our user interface. We also have a bunch of pre-built Jupyter notebooks that are on there because we support our own Python language, and we have a number of different real-world use cases. And so what you're seeing is we've set up these XR machines, these virtual machines in a sandbox environment in what we call a 2-player or a 3-player network configuration, right? So imagine the number of data sources expand. So you have, 9-player network configuration or 50-player network configuration. And we've taken real world use cases, feedback that we've heard from folks, and we've made it possible for somebody to perform secure multi-party computation in a way that they can kind of understand what's going on and select the data sources and select the type of operation and then see the output.
Well, Conor, we've got a question from the audience. Our first audience question. Please, if you have any audience members have any questions, send them in. How about emotional data and social media? Is that already part of alternative data? What's the future there? What's your feeling on this?
Yeah, I mean, I think a technology like ours presents an enormous opportunity when it comes to analysis of consumer sentiment data derived from social media. I think everybody's kind of concerned right now about what's going on with my data.
Right? So if Pringles comes out, I guess let's say, one of these energy drink companies, I saw, I can't remember the name of it. Maybe it doesn't matter. It went from like 2 to like 65, one of the new energy drink companies in the last 2 years. Could you have shown the social media sentiment of, were people trying it, spending the money initially, but then being like, oh, this tastes like cough syrup?
Yeah, I mean, should the data source owner behind that make that data available? Absolutely. As long as it's structured data, right? Yeah, that type of analysis would be okay using our technology.
Very cool. So how do you feel about Twitter in general? Is that an important medium? Is that something that you think is going to expand? What are your feelings on Twitter and its future for alternative data?
Yeah, again, I can only kind of give you my layman's
no. That's what you're here for, though.
Yeah, I have a number of friends that. Well, let me put it to you like this: I have a number of friends that work for systematic hedge funds, and they've all kind of assured me in their own way that there is value that is extracted from Twitter and social media sites like that. So it is something they use for sentiment analysis as part of their larger model. Yeah, but a technology like ours fits in pretty well into a space like that, right? Again, when you're talking about lots and lots of data, you're talking about the potential for incorporating that into a better model. Imagine combining that with something else where there's sensitive data inputs. That's where you really start to see, a value additive approach from a technology like ours. Individual row level data from users, being able to perform analysis on that.
What industry in general in America do you think has been most reticent to hit alternative data, or does it not exist? Has every industry kind of jumped on the bandwagon?
Well, I mean, I think when you kind of segment our approach, right, when you're looking at different verticals that are adopting a technology like ours and really excited about it, there's a couple key criteria that lends itself towards certain industries that are looking at alternative data. You get financial services broadly. And honestly, it's been mostly folks that are in the commercial banking side of the business as opposed to capital markets, or then even kind of extrapolating that out to hedge funds, simply because they have a number of different advanced machine learning models. So they have the ability to ingest more data. They know what data is out there that may be of value to them. And that's actually the biggest core chunk of what our client base looks like. And then kind of going from there, you have some of the adjacent industries like insurance and insuretech, which represents a really exciting area. You talk about a data-driven business that's looking for disruptive technologies. And then other industries like healthcare.
Well, what type of data would insuretech use? I read about that recent insuretech unicorn that can't even remember the name of it now. But nevertheless, what is an example of how insuretech would use your platform?
That's a good question. I mean, I kind of went through the same experience. I had to buy insurance recently. And I went with more of a traditional carrier, and it was kind of a Byzantine process. So I started doing some investigation into some of the insuretechs that are
Tractable.
out there.
Sorry, the company's called Tractable, and very cool. They use computer vision to look at the initial what do you call it? The initial damage that the vehicle has sustained, and they give you a quote. Is that something that can use your data?
Exactly. You hit the nail on the head, right? Now, you get a lot of cars that are coming out now with hardware devices in them, sensors that are clocking everything from how fast you're going to are you using your turn signal, things like that. And so that's obviously very invasive at an individual level. And the insurance company is not trying to spy on somebody. The auto manufacturer is not trying to spy on somebody. What they're trying to do is create better models and predict the risk, right? Should I get a higher or lower rate based on where I live and how I drive and things like that? Absolutely. That's exactly where technology like ours fits in.
So please give us more examples beyond insuretech.
Yeah, sure. Like I said, we're doing a lot of work in the financial services space. The way we like to think about the evolution of how our technology is adopted when it comes to data is typically.
Well, what about sourcing vendors? I mean, can it be used by a company to decide what vendors to use, or not really? Is that kind of too specific?
Yeah, absolutely. Of course. So, imagine deploying a hedge fund, right? You're deploying a virtual machine out to a potential new data source. You want to be able to do the analysis. You don't want them sending data to you. Maybe that data has private inputs. You essentially want to do feature discovery. You want to see if that adds value to your model. Absolutely. Without having kind of to go the long way around of, somebody sending you their data guide, sending the data over to you, delivering it, doing it. Yeah, it kind of obviates that.
Very cool. So what about satellite data? Can you talk about your satellite data, how you're accessing it, what you're using it for, what people are looking for with it?
Yeah, again, we don't really get into what type of data that the client is necessarily using, right? And we couldn't really comment on
from a general standpoint, I guess.
Yeah, again, a satellite data is the perfect type of data source. Structured inputs for a technology like ours, right? Imagine a hedge fund being able to use that, looking at causation, potentially other data sources that are similar, right? Like weather data or location data. That's exactly where folks would want to start with a technology like ours.
But what about consumer companies that want more insight into what geographies they should focus on? Is that something you've explored? Is
that's not really been something that we've looked into, and I think maybe that's just speaks a little bit to kind of the adoption of machine learning and data science within some of those companies, or where the priorities might be at this point. Again, there's kind of some key criteria for success within different verticals. We see across verticals, right? Do they have machine learning models in production? Do they have a number of different data scientists? Have they identified data sources primarily internally, meaning within the organization, within the company, and that they know will be value additive, but probably contain private inputs? I think in some areas we've seen some like cross marketing, right? One of the neat things that somebody can do with a technology like ours, and you may have read about it, Facebook and Google and folks like that are doing some research and looking into it, is around the idea of a private join. So being able to take all these data rows with sensitive inputs and being able to create a table through a machine learning technique called private set intersection.
Well, what about, Oxford Analytica, they were agnostic of the data, but they still ran into trouble also. How do you deal with a situation like that?
Sorry, did you say Cambridge Analytica? Is that the
It's
name of the?
Oxford Analytica.
Yeah. I'm not terribly familiar with that particular example, but
Okay.
again, when it comes to the data, there's no exposure to the sensitive inputs and there's no data transfer. For several years, we had independent, outside international law firms look at the applicability of our technology when it comes to data transfer under the GDPR framework. And our technology has been consistently reviewed and said, hey, this is above board and this is something that you could use when it comes to data transfer. The European Union Data Protection Board actually came out, I think at the tail end of last year, and actually specifically called out one of the underlying technologies that we use, secure multi-party computation, as being approved for that type of data transfer, right? So again, it de-risks the situation for the person who wants to be able to perform analysis on the data, as well as the data source owner.
That's very cool. In today's world, the ethics of data is becoming very important, and regardless of your place in the business wheel, you can very much get in trouble with the government, and nobody wants to touch that. So being agnostic of the individual data is so very important.
Yeah, you're seeing a lot of countries adopt a regulatory framework very similar in scope to GDPR. We have data privacy regulation here in California. I would imagine that over the course of the next 3 years or so we talked about, what data might be interesting 3 years from now. I would imagine over the course of the next 3 or 4 years, you'll probably see a national data privacy framework. And I think a lot of folks that are in industry right now are looking with that as the horizon and kind of using that as the benchmark. And that's why you're seeing a lot of interest in companies that do what we do, or data privacy generally.
Now, data privacy is so important now. It's it almost like it petrifies the business owner of today. Keeping your keeping your data private's very important. But I guess I want to understand more how much of penetration alternative data is having in the mutual fund and traditional fund state. If you could kind of speak to that versus hedge funds. I mean, obviously the Hudson Rivers and the D.E. Shaws want all the alternative data they can get, but are you seeing in a traditional, like Mason mutual funds acquiring alternative data? Is it a bit by bit basis? Is it a now and then? I mean, how sporadic is
it? I think from everything we're seeing, there's an insatiable appetite for data. Right? How people are using it internally, I think, varies remarkably by the type of fund they are. And I think you can see it just from this particular conference or a session. We were speaking with the organizer a little bit before our fireside chat started. And, the first couple sessions this morning was totally oversubscribed, right? And so you're seeing this huge migration towards data, right? And what people are doing with the data and how well they're effectively able to incorporate it into their day-to-day strategies. Like I said, I think that varies remarkably. I can tell you that
when Rebellion started in 2005, we spent, we were a machine learning development company, but we spent 2 years getting our data into a usable standpoint. I mean, my friend Claudia Perlich, who is one of the heads, or maybe the head of data at Two Sigma, always says that she spends 90% of her day actually cleaning data in the end. So you guys are taking away the data cleaning, or is there still significant data cleaning that needs to happen?
Yeah, there's still a great deal of data engineering work that needs to go in to preparing data to make sure it's usable and workable. I would say even considerably more so using a technology like ours, right? It's one of the challenges for adoption, right? Because you're operating on data in a way in which you're not seeing the private inputs. So there needs to be some kind of standardization. We make that easy for the client to do. I'll just give you an example. Imagine you're buying multiple data sets and one of the features is gender. Well, figuring out that you're going to make male 0 or female 1 or something like that, right? A standardization of data engineering requirements is incredibly important as part of the pre-processing step before using a technology like ours. And again, there's a number of different ways that we make that possible. So I say you can't see the private inputs. We do give you an understanding through our technology of the data dimensions, so the number of features, the number of samples, the players that are connected, and the network configuration. We even give the ability for the data source owner to add context, right? Exactly like what I just described, how you might engineer one of those features.
Can you give a little more background on this kind of context that can be offered?
Yeah, sure. Might be, for example, something as simple as what I just described, right? Like, how did we calculate this particular feature? Is this feature gender? If it's a social security number or national ID, do we put a hash in between them? Things like that. You can also give some more context on
Gotcha.
the types of features that might be included for analysis, but might have restrictions on the amount of times that they could be run, right? The more times you perform certain types of analysis in data science, as you know, particularly with a technology like ours, the more you can kind of glean about the underlying data, right? And that kind of defeats the purposes of using a technology like ours. So I think context like that would be important for somebody who's performing analysis to have.
So we no longer have to accept the traditional trade-off between security, privacy, and usability when handling data of any kind. You guys seem to be this nice kind of neutral area, agnostic area. It's kind of United Nations of data.
Exactly.
If I'm wrong, correct
that
me,
could be that could be our pitch. You hit the nail on the head. You can have your cake and eat it too. So you can maintain privacy, and you can still maintain precision in the output. So right now we support, we will guarantee, I should say, up to 8 decimal place precision versus plain text computing. So now, of course, we'll support more decimal places than that, but we'll guarantee the 8 decimal place, which is great for outlier detection. We've seen it used in fraud model building, for example, with like BNY Mellon, the largest custodial bank.
Could you talk about the BNY Mellon? You want to talk about your BNY Mellon, but go into the background of that? You do. Sure.
Yeah, absolutely. BNY Mellon likes to talk about what they're able to do with our technology, which is really exciting to find a partner like them. So biggest custodial bank, I believe they're the biggest custodial bank in the world, if not one of the largest.
I believe I read that recently as well, actually.
Yeah, so they have lots of data coming from their underlying custodial clients. That data is siloed, right? They also have data internally, right? That's coming along from different sources, given the kind of footprint that they have globally as a bank. And so they wanted to see if some of those features, which have been kind of mutually exclusive and segregated in the past, could be value additive for fraud model building, right? And so that's exactly what they did. They were able to use our technology with those inputs by using an XGBoost machine learning function. And, kind of their preliminary results were staggering, particularly when it comes to an area like fraud where outlier detection is important. So lots and lots of data. They said, and I believe I'd have to go back and double check, but they saw a 20% increase in mitigating false positives and false negatives, which is huge. I mean, when you think about a bank that size at that kind of skill,
that's unbelievable.
Right? Yeah. So it was really exciting. Is they talk about it quite a bit, and there's enough out there. If you did a Google search about Inpher and BNY Mellon, I'm sure it would turn up.
I'll definitely do that.
But what's really neat about what's really neat about areas like that is that, I talked a little bit earlier about how folks are typically thinking about using a technology like ours. Where we've had the most success is with clients who have identified data privacy challenges just internally, right? And then kind of the next evolution of that is, hey, we know that there's a data source out there that is valuable, hospital patient record data, but they're not currently selling it to us. Kind of going along that curve then is an ecosystem where really you have problems that impact every business that are similar within a particular vertical, fraud being one of them, anti-money laundering, right? Every bank has to deal with fraud. Imagine a scenario where you have banks like the BNY Mellons of the world improving their model by training it on data coming from another competitive commercial bank and vice versa, or as part of a larger network. We make it possible to do that. You're starting to see regulators like the Fed encourage that type of data collaboration without necessarily being prescriptive and saying, well, you have to use Infer, you have to use multi-party computation. They're just saying you should do more of this, right? And so I think that presents the most exciting area for disruption for us as a company.
That is extremely cool. So where have been examples where you've had issues with the clients and, where you felt, oh, that didn't work out, it should have worked out? Often we learn from our mistakes. Are is there, do you
Yeah,
have an answer to that, or?
that's a great question. And it really kind of, I think it depends on the particular client, right? I think broadly, this is a new technology, right? It's a new space that requires an enormous amount of education. I think areas where we've encountered some challenges are, hey, we kind of want to test this out, but we maybe haven't figured out exactly what data we want to use this on. This sounds really cool, right? This sounds like a transformative technology. We haven't quite totally figured out where we want to start with this. I think encouraging more data sources to make their data available is part of where we can get better, or clients using our technology can get better. But like I said, we've learned with even some of the improvements that we've done with our user interface and things like that, or even this XOR trial, like I mentioned a little bit earlier, that anybody can play around with. We've taken some of the abstraction out of this story, out of the process, and you're seeing a convergence, which is advantageous to us. One, the technology continues to evolve. We continue to support more algorithms, right? We felt like when we started, we supported most of the algorithms that somebody would use on a day-to-day basis, or 90%. We're starting to see more or newer avant-garde techniques in the approach to machine learning. XGBoost being one of those, right? XGBoost was something we had to develop and integrate to our technology. And so you've got that convergence, the evolution of the technology, you've got data monetization, you've got data privacy. It's all kind of converging towards one, which is really exciting for us. So we learn, it's iterative. Like I said, it's a new technology, but I think those are kind of some of the blockers that we've seen, against success in the past.
Yeah, no, that's a great answer to the question. Definitely. So I guess we're kind of getting towards questions from the audience. Do we have any more audience questions here?
I saw one question on here. How about alternative data for predictive models in the wealth tech space? I like that. That's for me, wealth management, wealth tech, with a technology like ours, probably presents the most exciting area for disruption. When you think about a lot of the models that are done for wealth management, it's very generalized, right? I make such and such amount of money. I have such and such amount of money saved. I'm such and such an age. I should retire at such and such an age, right? It's a very generalized approach. But when you think about things that really matter, like, hey, maybe I have a history of cancer in my family, and that's going to be, when I'm 60 to 70 years old, that's going to be a $200,000 out-of-pocket expense in addition to my insurance and things like that. That type of hyper personalization can only come through a technology like ours, right? Being able to access that.
That's such a cool hyper personalization. I mean, if you could, really give people an idea of what expenses they're going to deal with, significant expenses based on their health, based on their background, that's becomes such a useful tool.
Yeah, exactly. I honestly, I think it's the most exciting area for disruption using a technology like ours.
Yeah, no, definitely very much so. What are your, I guess, 10-year dreams? What type of data do you see happening in 10 years where the technology hasn't even been imagined yet, but one day we'll get there?
So, sir, could you repeat the question?
What data do you see being available in 10 years where the technology hasn't arrived yet to make that data available, but you believe it will? Or is that too out there a question?
That's kind of an out there question.
No, it's as out there as I could possibly get without, that's my Oliver Stone question of the day.
Well, you're seeing the rapid advent and adoption of wearables and hardware, right? So a lot of the things that we used to be kind of analog are becoming digital, and you're even seeing this too with like the trying to think of the exact.
So, are you going to be able to start getting Sorry, go. No, finish your thought.
No, I was just going to say metering, digital meters, right? Generating enormous amounts of data, but it's obviously very, very personal data, and people don't think about it that way. You're thinking about like, well, when are your lights on, and when do you increase your temperature from 70 to 75 degrees and things like this? It knows when you're home and when you're not home and things like that. I think that's the type of data being generated from like IoT and hardware that will really kind of present a new frontier, for better model building and more data. If you're looking out in that 5 to 10 year time horizon.
No, that was wearables is a great answer actually. That I feel like that will be the data of tomorrow as well.
Yeah, and I
data.
want that. I want that data as an individual. I want that data to be useful to me in some way. And I think, again, when you look at the nexus of like, okay, I've got data coming from, my blood pressure, my pulse from my watch. How does that factor into, my wealth planning, my wealth management planning, right? And again, going back to using technologies like Inpher is what's going to make that possible.
That's that's a super cool. But I hope maybe we can get you to. Do you guys have a white paper? Does Inpher have a white paper we can read?
We publish a lot, and so if you go to our website, there's a lot on there. We have kind of our we have about 30 employees. I think half of us have PhDs, kind of number of different backgrounds: number theory, data engineering, data science, cryptography. And so as you might imagine, we publish quite a bit. And so kind of our core paper that proves the math behind all this, that talks about the cryptography that makes this possible, is accessible via our website. And so we tell people, don't trust me. I'm in business development. Don't trust what I'm saying. Trust the math behind this. And that's exactly what these papers prove.
Awesome.
Yeah, I mean, our technology, that's one we didn't really talk much about today, but when you think about things like future proofing for quantum resilience and things like that, being able to work with players at scale, you're talking like devices, you're talking about tens or hundreds of millions or billions of devices. I mean, that's really kind of the frontier of what we use now and what we move to and what we look towards. And so a lot of the papers that we have and a lot of the information that we have on our website talks about that.
So stupid question probably, Conor, but would anyone have been able to infer the, no pun intended, semiconductor shortage that has occurred globally through your data, I guess? Or is that too kind of opaque?
I think that there are ways that somebody could have gone about doing that. And I think one of the areas that we focused on as we kind of thought about moving towards the asset management space, the types of algorithms that might be needed for time series analysis and being able to use, probability models, Granger causality or causality being one of those. I think with the right data set, you would have been able to glean insight on what was going to happen. When you think about this semiconductor manufacturing process, right? And again, I'm not in semiconductor manufacturing, but it is a very data intensive business because of the fail rate associated with semiconductor manufacturing. Where there's, hundreds or thousands of sensors that go into this to try to ensure that along each step of the process, that the semiconductor chip is moving forward and it's not going to be, there's no defects and things like that. So with all that data being generated, and some of that is being generated from devices or machines that are made by different components or different manufacturers that aren't necessarily sharing data, using a technology like ours, you'd be able to perform that type of analysis on the data derived from that in a very secure manner. Whether or not the semiconductor manufacturer would make that data available is entirely on them. Whether or not the manufacturers of each of those individual sensors or components would make that data available is kind of on them. But we have seen a lot of interest in that space specifically. So to say that somebody could have helped predict that, I think the right data set is out there. It's just not something that I've heard from one of our clients say, hey, we used it and we predicted this.
I mean, you've got to be creative no matter what your position in life, no matter how much, someone like you will kind of spoon feed the data. Without intelligent creativity, there's no innovation. So yeah, no, that's going to have to happen.
That's what I like about it. You talked a little bit about fundamental managers using data sources and what is kind of becoming commoditized and not commoditized. I don't know. Again, I'm not a practitioner, but I can tell you that even for the systematic managers, where everyone's got this desire to, buy up lots of new data, or there's value that can be extracted from the data that they're probably already buying. There's probably features that the data owner is not making available. And so thinking a little outside the box of like, well, what else can I now access that historically my compliance people have said no way, or the data owner has said, No way. Or even the data is being altered in some way, like anonymization or differential privacy, which is kind of diluting the row level data. That's where you put your thinking cap on and think about the opportunities that might be available using a technology like ours. It's really exciting. I mean, even think about like, adversarial entities, like two asset managers being able to collaborate on analytics, being able to do that. Or for example, if you're a large pension fund, right, you really want to analyze the systemic risk in your portfolio. So for all those different funds that you allocate money to, you're saying, hey, well, you're going to have an Inpher virtual machine, right? So you're going to keep your position data private, which is your holy grail and your special sauce. But we're going to understand what the systemic risk is in our portfolio. It doesn't help a pension fund or a larger asset manager if they allocate to all these different long short equity hedge funds, but 25% of their holdings are in Apple or something like that. That's a lot of systemic portfolio risk, right? Or even like what you saw recently, total return swaps with the family office issue. Some of that, or a lot of that, could have been obviated using a technology like ours. So it's not just the data acquisition. It's kind of thinking about new ways of being able to use the data that you already have. I think that probably presents the most exciting opportunity for us.
Awesome. Well, this was a great conversation, Conor. Do we have any more questions from the audience, or are we concluded? I think we're good.
Hey, I thanks for allowing me to be on here and talk a little bit about what we're up to. It's kind of a newer space for us. I mean, alternative data is not a new space for us, but as you're thinking about trading and asset management, it's been a very deliberate approach for us. We're waiting for some folks to catch up. We're starting to do some early stage work with systematic hedge funds. I think they're going to be the first early adopters on this. We're moving towards, a partnership with a larger asset manager that's going to help us do some productization work, which I think is going to be absolutely necessary to make a dent in this space. But yeah, thanks for letting me opine a little bit about this, and thanks for the questions.
When Rebellion started, got back in 2005, people didn't take alternative data seriously, and now every single large exchange has an alternative data side. I mean, you look at NASDAQ's acquisition of Quandl, and I mean that, talk about embracing alternative data. Data is the new oil of the 21st century, without a doubt. And you guys seem to have come up with a very cool way to access it in an ethical light, rather.
Absolutely.
Awesome. Well, thank you so much. I guess that concludes our conversation today. Awesome. Be well, Conor, and
thanks.
I'll talk to you soon.
Take care. Talk soon. Bye-bye.
Bye.